Good morning, everyone, and thank you for joining me in today's daily market review. It's the 4th of February 2021, and this is Mohamed Yaoud, Head of Market Research at CJC Markets in the MENA region. As usual, we will have a quick look on the charts to know what we're expecting during the day, so please stay tuned. Welcome back, everyone, and let's start by having a quick look on the US dollar index. Basically, yesterday we had our key levels at around 91.05 and 91.28. We mentioned that any break below will be bearish and any break above will be bullish. Basically, we just traded inside those key levels. We have created a high that was equivalent to the previous high at the same levels. Then we tried to retest 91.05. Basically, we have managed to create a higher low. This indicates a buying or a bullish power on the US dollar index, and right now we are trying to break above the level, which is 91.28. So our key levels for today, let me just delete for the levels for yesterday. Today's levels are those ones. Today's levels are 91.30 to the upside and 91.08 to the downside. Any confirmed break above this level, which basically the dollar index is trying to do at the moment, just around 45 minutes before the European session. In case we traded successfully above this level, in case the dollar index holded its trading above 91.30 and created another higher high, we will be bullish on the dollar index from those levels to target this level at around 91.74. Let me tell you why is that on the bigger time frame. Pardon. Staying above this level, which is 91.30, will push us upwards to 91.74. This space between those two levels are basically a path of least resistance, so this is what we will be expecting on the medium term or short to medium term on the dollar index. However, let us just first wait for a confirmed breakout above the 91.30, so we would be bullish on the dollar index. On the pound dollar, basically we had a brilliant move to the downside yesterday. This move was basically around 60 or maybe even 70 points to the downside. We managed to break below this key level that we highlighted, which was 1.3609. What we are waiting for right now, we're waiting for a confirmed break below. We don't want to sell short from here and then see our prices go above this level again, which makes this breakout a false breakout. So once we stabilize our trading below those levels, 3609, we will be bearish on pound dollar on the medium term, because the next support zone is nothing but 1.3519. That's the following bearish support, or the bearish line that we should target, and then we will be targeting the next support zone at 1.3450. So we are bearish on the pound versus the dollar. However, my advice is we need to wait for today, because we are waiting for the Bank of England interest rate decision to be announced today, which should definitely affect the pound versus the US dollar. And also, just to give some time for the chart to confirm whether this is a confirmed breakout or it might turn out to be a false breakout. So my advice is the pound dollar is on our watch list. Just leave it for today, and if this has been confirmed, we will be bearish on the pound dollar on the medium term. The dollar yen is still moving upwards. Basically, on the last rally that we are seeing right here, we mentioned multiple times during the past week that the move on the dollar yen was not supported by any momentum. However, this last rally that we are seeing at the moment is basically supported by good momentum. So the dollar yen is finding some bullish power from those levels. So this should basically continue our rally up to target 105.67 points, and that should be our target on the US dollar. Again, this zone is a path of least resistance of 104 points roughly. We have covered already 60 points, and we have the remaining of 45 points to the upside. That should be done today on the dollar yen. In case, as we mentioned, the dollar index succeeded in staying above the key levels of 91.30, and that's for the dollar yen. Regarding the dollar versus the Canadian dollar, it has basically done nothing since yesterday. When we mentioned yesterday's trading, it was basically trading here. We mentioned that it's between the support and the resistance. It came back again to retest this support zone, and I can see that on the 30 minutes it's doing nothing but a very narrow sideways range. This is our buying zone, and this is our selling zone. This is around 45 pips. You could basically trade this on a smaller time frame, like the 5 minutes, buy, sell, buy and sell, buying the bottoms and selling the highs. However, any break to the upside, let me just tell you the numbers exactly. Any break above those levels, which is 1.2808, should continue the rally to the upside. But any break below this level, which is 1.2762, is basically nothing, because we still have our primary support zone here. So it's either we trade inside this trading range, or preferably we need a break above 1.2808 to be able to initiate our longs to the upside and target 1.2846, and that's for the dollar versus the Canadian dollar. Let us have another look on gold, which basically is bearish since yesterday. We have managed to break below this level, which is 1829. That was our key level for yesterday. We managed to successfully break below this. I can see that gold is trying to retest this critical zone, and we are bearish on gold trading from those levels, and we'll be targeting the support zone of 1800, because basically, as we mentioned, again, this is a path of least resistance. We have nothing here. We need to fill this liquidity void, so we will be targeting 1800, and that's what we expect on the gold trading for today. Oil trading is brilliantly continuing the rally to the upside, especially after OPEC Plus meeting yesterday. They basically did nothing new. However, they mentioned that the oil markets are pretty good at the moment. They are happy with the prices, and this basically supports the move to the upside. I can see that on the daily time frame, we are already above the coronavirus levels. We are trading back at roughly 56.15, and that was since January of last year. So the next resistance that we have should be around 59.61, and that what should be we should be targeting those levels on the short to medium term on the US crude oil. So that was all for today's video. Thank you very much for being here. Wait for the daily market review tomorrow, just before the European session beginning. Once again, that was Mohamed Yaoud, Head of Market Research at CJC Markets in the MENA region. Please stay safe and have a lovely day today.
CJC Markets is a leading global financial institution that has granted a derivatives issuer license issued by the Financial Markets Authority New Zealand. CJC Markets has a wide range of products, latest technology platform, and eminent customer service. CJC Markets offers superior execution, competitive spreads, and low transaction costs. CJC Markets. Smart trading, smart life.